So for today, we are going to be talking about one of the most important aspects of Forex, which is entry types. And this is where a lot of persons are most interested in. Everybody wants to know your entry model, your strategy, basically. And they think that your strategy falls under your some people actually think that your strategy is all about how you get into a trade, but at least so far you now understand that your strategy is not just about how you get into a trade. It constitutes of everything: direction, point of interest, news, entry, management, which is like the most important thing. And I've talked about that a couple of times. All right, so um, entries. We have multiple, or we have three types of entries, just like I've said. Basically, two, right? One is the normal one that I've taught you guys. That is, let's say we are having a downtrend on the 4 hours time frame, and then price goes back, and on the 45 minutes, right? On the 4 hours, this will be your 4 hours shift. So directional buyers, right? You are bearish. This becomes, let's say, your point of interest where you need price to come into. Okay. And then on your 45 minutes, remember I've changed from 1 hour to 45, or your 15 minutes or your lower time frame, price is pulling back like this, then gets to your POI, it shifts, and then it retests. There you will get in, and then you will now target what the low. So let's change this to a red, right, for that lower time frame, so that you know that this is a lower time frame. So this is something that you guys should be used to now, because this is my type 1 entry model. I do not have anything like a plus setup, right? Every setup is every setup has a 50-50 chance. I don't really believe on a plus setup and all those things, right? So every setup is a 50-50 chance. There's no such thing as an A plus setup. But you can believe that there is, sure. It's your thinking. So I'm just going to be using for bearish market scenario, right? Because the inverse is going to be for the bullish market scenario. So this is my type 1, or this is my entry model 1. Very simple, straight to the point. You do not really need to complicate it, and you can absolutely just trade this entry model only. Okay, so now let's go to the type 2. Just straight to the point, I'm not wasting your time. Now let's say we are bearish. Okay, still we have a break, and now we are having what, a pullback. So I'm just going to change this back to blue. So this is your 4 hour structure, and then your 4 hours are started pulling back. Remember I told you guys that two things needs to happen when we look at the candlesticks. Everyone start looking at a couple of examples. I'm going to be explaining this. When you're having a pullback, your 4 hours candles you need to see it happening on the 4 hours candle. You need to see, if it's on a bearish like structure, you need to see a bullish candle that pushes up, pointing to that reversal, or pointing that reversal has happened. That bullish candle open and closure. Then if it's for a bullish setup, something like this, you need to see a bearish candle closure. Okay, so that is where your pullback starts from. I think you guys should be acquainted with that by now. Now let's say on lower time frame you start having this, then you have a POI there that price has gotten into. Now let's say you have this again. Now you have a shift. Okay, price maybe fails to get you tagged, you have another shift, then what? Then um, price pushes back up. So let's assume this is the 15 minutes, whatever. Price pushes, induces, then it shifts. Then there you will now enter from and take price lower. So I'm going to be changing this to the red. Now, what this means is this is your POI. Price has always note. Price is always at your 4 hours point of interest. You get it is always at your 4 hours point of interest. This will be your target. This will be your target. So note that you are not looking for inducement at every given point. You want to be sure of direction and you want to be doing it on an internal structure. So times that I make use of inducement setup is one, I make use of it like on the lower time frame, say 40 from 45 minutes downwards, 45 to like 5 minutes, because I don't really do the 1 minute. There are times I use the 1 minute time frame, right? And I'm a bit strict with that. So I'm going to say if I maybe whenever I'm doing that, I did that this month, right? Although I didn't really take the trade anyways, but I'm going to be talking about that now. So I'm mostly interested in taking these inducement setups from the lower time frame. That's one. Or if I'm taking it on the higher time frame, like the 4 hours, I want to see the same thing happening. I want to be using internal structures, not external structures. So you will hardly see me, or you will not see me taking trades from the 4 hours external structure. Okay, sorry, my mic. All right. So that being said, now what this here means is, so I'm going to use here as, okay, I can't really use that, but just bear with me. I'm still going to be using this 4 hours line because I'm on the 4 hours time frame. If I should use anything lower, it's going to crash. So I'll just be using the dotted lines, like so. Maybe I should use, well, let me use this. I'll just use the solid line now. Let's say on your 45 minutes or 15 minutes price breaks, right? That means you have that shift after you've asked yourself, how are you pulling back? Now, price gives you another break, two breaks of structure in this point. Now, remember that this region is where you actually want to be getting into a trade from. Okay, so there's like a tendency that price needs towards, and let's assume that you even have an imbalance there. So there's a tendency that price still needs to come into this point for you to get tagged. So in a situation like this where there's an imbalance there, it makes things even perfect. Okay, now this means that, okay, you have imbalance, right? And then you have this guy that has shifted. So you just absolutely need to maintain that point to be where you want to enter from. So this could be like your first entry point. So like that. Then you have something like this, say for a 1 to 8. If you're risking 1 to get 8, or something slightly below 8, let's say 7 or 6 point something, because of your management rule, depending on what it's like. All right, so for this now, I'll just get this off. So let's say you now get tagged there. Now, because there are a couple of structures here, now you have a break of structure one here, you have a break of structure two here. So what I'm talking about is a break of structure one here, you have a break of structure two here. Now, this confirms your trend. Remember, I told you guys initially that what confirms your trend is, let's say you are going downward and then you get a break, price retest, and then you get a second break. So therefore, you have break of structure one, break of structure two, right? Now that is confirmed for you to, that's good enough. But you don't always have to wait for that to happen. That's why we make use of confirmations, right? So it is the same thing for the lower time frame. What confirms your trend is when you have two break of structures. But why we are on the while rather we are on the lower time frame. Okay, what we want to actually see is we just want to see one shift, and if we get a pullback, we are entering. We're like a little bit aggressive because we are making use of a confirmation entry type always, right? So that's why I'm always being aggressive. So when you see break of structure one and two, and then you do not get that, let's say you still have that imbalance there, you will not always have the imbalance there. But I'm just assuming if you have an imbalance above resting there, you can still have your pending orders there, right? And then you take price, you anticipate getting tagged from that point. But in a situation where you don't, you want to actually maybe chill, right? You want to wait a little bit and you want to see this inducement happen. So now the inducement concept is price goes, it takes this high, okay? It could even come and take this high. Then it is while it is taking that high, it's going to be showing you its hand on how it is doing this, right? So when you see a break of structure one and two, you want to, and then you now get price pushed to the upside to take the previous highs. Okay, this can be an inducement. You always anticipate it to be an inducement, or do you understand, or a manipulation, right? Based on the fact that price is now trending. Okay, so there's a trend in price, right? So when this happens, you want to ask yourself, how did price break that high? So how the price induce the high? So in this case, let's say this is our 15-minute structure, right? So price gives us because structure one and two, then price pushes to the upside, and price leaves this internal structure here. So that is how price broke the high. So when price now pushes back down, like price takes it, it fails to create a new internal, a new 15-minute structure, and then it just pushes back with volume and breaks this low. Okay, that confirms that what this is an inducement. So I can use, let's say, the dotted line for this. That confirms to you that this guy here is now an inducement setup, right? So you guys can see this, I hope. So this right here, seeing this internal structure shift now confirms. So what you now want to do in this case is you just want to wait for a reclaim based on where there's imbalance, not just imbalance, other block also. So you now want to get into that trade from this point, and your stop loss will no longer be here. Your stop loss will be this because the manipulation has happened. Okay, and then your take profit is going to be here, and you'll be anticipating price to come and clear this low. And once price clears that low, let's say you can lock your profit or you can do whatever. Sometimes maybe when it just takes this, I can just choose to take partials or something, because you might still get a pullback to your entry and then price falls, and but basically like that, your stop loss is supposed to be here. So it's not supposed to be here. So you're going to have a smaller stop loss in that case. However, the inducement does not always happen, right? But then it is there also. So a lot of times you see people putting an X or putting a dollar sign on inducement setup. So do not be confused, right? It's just inducement. It's the same thing. So you need to see, for an inducement setup, there need to be a trend. You need to see a minimum of two breaks of structure. Sometimes it's going to be one actually. There are times that I make use of one. When I make use of one is majorly when I am trading lower time frames, right? And I just want to be aggressive. I can anticipate that there could be a fake house, you understand, and I want to still get into that trade. So it like happens, right? But majorly, the truth is majorly your inducement comes when there is a trend. You need to see a trend in market, right? Which is a minimum of two breaks of structure. So just keep to that rule, follow it, and you'll be marveled sincerely. Now the inducement setup does not always happen, but then when it does, right, it is actually really solid. People call this their A plus setup, but like I said, every setup is a 50-50 chance. So this is my entry model too. Now for my last entry model, now the flip of this, right, is going to be for the buy side, which I'm going to be doing. I'll be flipping the charts for you guys so you can take screenshots. Now my last entry model looks exactly like this second one, but a bit different. Now we have a downtrend, we have a pullback, price does this, and now we're going back up. Change this back to this. So this is our 4 hours. This is my neighbor's chicken. Then we have this 4 hours break of structure here. Okay, and now price is pulling back on the 4 hours. Now we know that this is going to be our next target if at all price is going to be selling, right? So we want to now ask ourselves, how are we pulling back? So we now have something like this. Okay, so let's just say we have something like this back to our PY. Now price does this, it gives you internal structure, gives you something like this, one and this two. Now price will fail to take that major structural point that you want to see it take. I'm coming. I want this to be a little bit longer. Good. So now let's now say that you were anticipating price to come and break this low here. And then unfortunately price is not coming to that point. Now you start to see internal structures of how price is pulling back. So I'm going to be changing this to the red line exactly. Then put this above a little bit. Now you have your POI here. So remember that the first question is, what is structure? The second question is price pulling back? Third question is, how is price pulling back? You're always asking yourself that question, how is price pulling back? What time frame am I seeing the first structure from? Do you understand? So now, internal structure wise, you begin to have this. Now, what is now looking very, very similar to this? Now, on this internal structure, now note that this is the 45 minutes. Now, on the 45 minutes, you now have internal structure that gives you this break of structure one. I hope you guys will be able to see this. It gives you break of structure one here. Let me increase this to uh, I'll change this to, let's change it to dotted line. Okay, so it gives you that break of structure one and gives you what break of structure two. So on your internal structure rather on the 45, you're having break of structure one and then break of structure two right there. Then now what happens? Price pushes back to the upside. It takes this high. Now you will anticipate that this is an inducement. Okay, you anticipate that this is an inducement. Then you now go to a lower time frame and ask yourself, how did price induce coming? I think I'm going to be showing you guys something else, right? Again, now you're going to ask yourself, how did price induce? So let's say the same way you have something like this, price pushes to the upside, okay, then price comes back, but this is happening for an internal structure. So that will be your entry, and then you take price lower. Okay, so here there is no shift of your major structural point. Everything that is here is an internal structure. So you now have this. So you have that as your major, let's say 45 minutes zone that needs to be broken. Now what happens is immediately here gets broken, right? A lot of times you are not going to be getting tagged anymore. So this is why when you see this internal structure giving you break of structure one and two, right? And then you see this inducement happening, you just go in and you just get in from there, right? Put your risk there, getting aggressive, right? That is from this point is where you are getting in from. Okay, and then you are shorting it down to here. So this is going to be my entry model 3. Okay, I just remember that I think there are more than three. There are more than three model. I think there are about four entry model, right? Should I give you guys the last one? Should I give you guys the last one? I'm still contemplating. Should I give you guys the last entry model? You can absolutely work with this, right? And this is perfect. This works. Okay, forget it. Let me give you guys the last one. Right. So you want to see this internal structure shift, and then you want to see a pullback, and you just get it from there. Nicely sweet, no complications, right? Everything is straight to the point. So this here becomes your inducement point. Let me put that X stuff there so that all right, cool. So that's your inducement setup. Now for my last entry model, I just remember that there were actually four, not three. um Now you have your direction, which is confirmed. You have your pullback. You've asked yourself how price is pulling back, so change this to this. So I'm always going to be saying 45 minutes, right? I'm just assuming. Now you're having your pullback like this. Okay, then you have, say, another structure, 45. Then you have your shift. Yes, then you have a second shift. Then you have something like this. Okay, then you have something like this. Then you have something like this. I'm going to be explaining this. So this becomes, I'll just move this somewhere. Like I see, I left that there for you guys, just in case. Alright, so we have something like this, a little bit choked up and messy, but I'm going to be explaining this now. First things first is your direction. Second thing is your point of interest, which you guys know how to look for. So that is there. This is also here. So this is majorly where. Now, how is price pulling back? Price is pulling back on your 45-minute structure that you know. Now you have your break of structure here. You were supposed to be tagged somewhere there. You now have a break of structure too, right? Say you even get that, then you now have price coming to induce there. Then you now have this area that price is most likely going to go and clear, and then most likely into that level. Now this area is assured, right? That's your, I don't say assured, right? There's no assurance, but this is where your most probability is, right? This is the area that price has more probability to come to. Do you understand? So that's what I mean by it's assured. Now after your inducement, right? Now price gives you, you now ask yourself, how is price, or how did price break, you know, this high? How did price induce this high? That's why I said break. I don't want to use the word induce. How did price break the high? Now let's say on your 45, still on your 45 minutes, you could see a tiny structure, an internal structure that was responsible for taking what, this high. Okay, so now you are waiting for this guy to shift. Now what now happened is price takes it. I told you inducement takes and run. It grabs and run. It grabs and it moves, right? It does not waste time. If you see something like the break of structure one, break of structure two, and you're anticipating an inducement, and then this happens, then you now see this. This is not an inducement. This is now a break and another break. So direction, then that's another direction. You understand? So if you're trying to trade this, price might just come and do this. You now use this as inducement. Do you understand? So like it's crazy. It could be crazy sometimes. So now, after the inducement, notice that there's an internal structure. Yes, there's sorry, there's an internal structure here that is supposed to be broken, and then you now see a pullback. So now you are anticipating this guy to happen. Now, unfortunately, that does not happen. Now, what now happened was price induced give you a new internal structure still on that time frame. Immediately you see this structure form inside this structure, because what is going to be happening is price is going to be making use of this point as a POY. Okay, so immediately you see this internal structure being formed here. Now, right, you can go straight in aggressively from here and sell down to this place. So this might be a little bit confusing for you, but let it sink in. These are all my entry models. Entry model 1, normal type. Entry model 2, inducement type. Entry model 3, internal structure inducement type. Entry model 4, what do we call this? Inducement plus internal structure type. I don't know, anything you want to call it. But these are the 4 entry models that I have. So that's why you can see that I have I could have like a high frequency of setups from now, right? Might be having a little bit higher frequency compared to the low frequency setups that I usually have. Plus, depending on the amount of pairs you trade also. So you need to know how to anticipate this happening, right? You need to be prepared. So you need to train yourself or train yourselves around what? Around this piece. So if you get yourself acquainted with all of these entry model, I bet you are good. I bet you are good. There is nothing that you need. There's nothing else that you need out there anymore. There's nothing else that they'll teach you that does not fall under this category. That's just the truth. Nothing else that you will be taught that doesn't fall under this category. So you can take a screenshot of this, get it stuck into your brain. Understand that the red lines are your lower time frame. So you are making use of these setups on your lower time frame, not on your higher time frame. And even when you want to make use of it on your higher time frames, right? There are specific times, right, that you make use of. You use the internal structure. So you're always using this model on your internal structures or on lower time frame structures, right? So the inverse of this, if I invert this, is going to be for what? Your buy side. So you can take that screenshot and you know get used to that. So these are my entry models. So I'm going to be also um, taking a screenshot of this and sending it to my guys, right, on WhatsApp. I'll be doing that after the end of this course. So from here, I'm going to be, let's say, showing you guys live example. I think BTC precisely did mm, did a lot of this internal, did a lot of this inducement entry model for this month, right? I missed some. I missed a lot actually. I just got into one, and I also missed a setup yesterday from BTC not particularly, yeah, I'll call it miss because I didn't, it's actually a miss. I took it, but then volume took me out, and I was waiting for price to get me tagged again, and that never happened. And so that was that about that. So yes, so these are all. This is everything on my entry model. This is everything. I do not do anything outside these 4 entry types, right? Except the one I told you guys that if I sometimes I can anticipate that one shift could also be an inducement, right? That's when I'm using confirmation. Sometimes, not every time. Okay. But let's say I won't even be doing that. I'll just be strict right? Doing what I have to do and staying more focused from now. So that's all for this, guys. Enjoy yourselves. Back test, forward test, practice. You could forward test actually. Forward testing is much more easier than back testing. That is why a lot of people they'll tell you that they don't back test, back testing is scam and this, but it's not. Sincerely, a lot of the things that I know, right, came from back testing data. Okay. And when you think about something or when an idea pops into your head, right, you want to actually back test it. So it came from there. And backtesting boosts your confidence. Forward testing now shows you some things that you did not see while you were backtesting. That's what it does. So you can do any, sincerely, you can do any, but backtesting actually helps you to learn faster. That's what it does. So that's why you see I'm always talking about backtesting because it helps you learn faster. So these are all my entry models, guys. Stay safe. Catch you on the next one.